In this video, I'm going to share with you my step-by-step smart money strategy that has made me over $30,000 in the last 3 months. This is the exact ICT strategy that all of my exclusive members use, and here's a sneak peek of some of the incredible results that they've achieved trading this exact strategy. As a bonus, at the end of this video, I'll guide you through a case study of a real trade that both myself and all of the exclusive members took trading this exact strategy. You're going to get so much value from this. Let's dive in. Okay, so the first thing that we need to do when we turn up to the markets is step number 1, which is identifying institutional liquidity. And what you're going to see within the market when you first turn up to the market is you're going to see a low, then you're going to see a high, then you're going to see another low in the market, followed by another high, etc., etc. And all this is simply doing is forming a range within the market. But what we need to understand is that we have a lot of liquidity that is resting above and resting below this range in the form of buy-side liquidity, like so, and in the form of sell-side liquidity, like so. So what you need to understand, for example, if we are sell bias in the market, what we want to see is a run of buy-side liquidity. The reason why is because what this move right here is doing is trapping traders thinking that this is a breakout. So when this market impulsively breaks above like so, this is going to entice traders thinking, okay, this is then going to be breaking out to the upside, so they're going to be getting long in the market. So long buyers enter like so. Their stop losses are going to be below swing points on the way up within this move. What this is also doing is trapping any traders that were trying to get short prematurely, like so. Their stop losses are also going to be resting above here. So what this is doing is manipulating them out of the market. So they're going to be stopped out. The breakout traders are induced into the market, and their orders will be matched up with the institutional sell orders. And then what you will find will happen is price will then plummet to the downside, liquidating all of these buyers that stepped in the market. So what you're going to see here is our entry is going to be somewhere within this manipulation right here. And what you'll find when price starts pushing to the downside like so, this is literally going to start cascading these buyers out of positions. So for example, if their stop losses are here, they're going to be stopped out, the buyers will be stopped out, and this will just keep cascading to the downside, okay, until there's no more buyers left in this market. And then we've hit our final target, which is going to be the external range liquidity, which will be resting down either at the Asian session low or in terms of market structure, down at this low right here. So this is where you're going to be targeting, and it's our job as a trader, if we are sell buyers, to wait for this manipulation like so. And then once we see this, our entries within here, we'll have a stop loss above the invalidation, and then we'll be looking to target lower prices to cascade the buyers out of the market. You see, a huge problem is traders literally do not have the patience or even just understand this concept that you need to wait for this manipulation to take place. Then you can act accordingly, and then we can look for a sell trade. And then vice versa, guys. So if we are long bias on the market, we're going to identify the institutional liquidity like so. And then what we're going to see is price is going to come down. Price is then going to manipulate this sell side liquidity right here. So this could be the Asian session low, or this could just literally be the consolidation. And then what's going to happen is once we see that, we're going to get a distribution in price to the upside, because what this is going to do right here, this move right here, is going to induce sellers thinking that this is a breakout. Their stop losses are going to be within the swing points like so. They're going to be entering here short, thinking that prices are going to go lower, but this is just an institutional trap for retail traders. And then what happens Once we see the manipulation, our entry is within this area right here. And then we look to capitalize on the institutional move, which is the actual trend continuation play to the upside, like so. Okay. And then anyone that was actually buying in this market too early, remember, they're going to be getting stopped out right here. So until we see that inducement, we're not going to be participating within the market. So this inducement right here needs to be very clear. It needs to be easy to spot. And then once we see that, we can act accordingly and take the distribution phase within the market. So this is step number one, identifying institutional liquidity. The next thing that you need to learn is step number two, which is identifying institutional entry model. And this might sound quite complicated, but let me make it as simple as possible because it's really not as complicated as it sounds. So what you're going to see within the market, as we've understood from step number one, is market is going to seek liquidity. And then once we see that, once we see the manipulation, what we're looking to spot is a market structure shift. And we're looking on the lower time frame. So for example, on the 1 minute or the 5 minute time frame. And what you're going to see, once we see that manipulation on the smaller time frames, we're looking for the institutional entry model, which is simply just a market structure shift like so. Once we see that, we can look for a slight pullback, and then we're going to be shorting this market to the downside for a trend continuation play. So what you're going to see like so is, this is the manipulation. What we're then going to see on the lower time frames is you've got a high, you've got a higher low, followed by a higher high, another higher low, followed by another higher high. Then what you see within the market is a break in market structure like so. And then once we see that break in market structure, this is our confirmation. So this is super important, and we need to wait for the lower time frame market structure shift. Once we see that, then we can look for a pullback into either a fair value gap or an order block, and then you can look at shorting this market to the downside as a trend continuation play. You see, a huge mistake that a lot of traders make is, they won't wait for this confirmation right here. They just blindly go entering off order blocks and entering off of fair value gaps, when what you need to see is the market to show its hand. You need to see the market to tell you that, okay, this is shifting and you need to be paying attention, because this is the first sign of weakness, that the market is now showing its hand, that we're going to then potentially see lower prices within the market. And then vice versa, guys. So let me just quickly show you, if we're looking for longs within the market, what you're going to see is price trade down into the lower boundary. Then you're going to see a cascade in price manipulating traders short. Okay. And then what you will see on the smaller time frames as a confirmation is a break in market structure like so. Then you're looking for a pullback into a fair value gap or order block. And then you're looking for a continuation to the upside like so. And this is your trend continuation play. So until you see this confirmation here, because you've got a lower high, lower low, lower high, lower low, then you see the break of structure here. We get a higher high here confirming the trend shift. Then we can look for a potential pullback on the lower time frame. You bid off this area, and then you look for that trend continuation play like so. So this is step number two, identifying our institutional entry model. Okay, so step number three is institutional invalidations and targets. So what you've got in front of you right here, this is the lower time frame entry model. So for example, if we're short bias, this right here is what we're looking for. So what you're going to see in the market is coming up, you've got your swing points, right? You've got your higher high, higher low, followed by a higher high. So this is your lower time frame. Then what we see is a break in market structure to the downside like so. We see a pullback. Our entry is within this area like so. And then we catch this sell-off to the downside. So this is the sell model right here, the institutional sell model. But in terms of invalidations, this is what you need to know. So if we're shorting from this area right here, so from right here, what you need to understand is our invalidation is going to go directly above the liquidity sweep. So we maybe want to give it a little bit of room to breathe right here. But if we're going to be stopped out of this market, once we see the confirmation, once we see the market show us their hand and we're entering right here, then we understand that, okay, then if we are wrong, we can have an invalidation above this liquidity sweep right here. And that is a clear invalidation because we know if price then comes back up to this area from here, we know if price comes up there, then this trade idea will be invalidated because once we see this confirmation, price should then be continuing to the downside. If it doesn't continue to the downside, we know that we're incorrect or wrong on this trade, and therefore we need to be cut out of this trade at the earliest point. So that's why you want to have a stop loss above the liquidity sweep like so, and then we'll be cut out of the trade at a very convenient point. And then vice versa, guys. So if we're looking for longs in the market, what we're going to have and what we're going to see is we're going to have a lower low, followed by a lower high, followed by a lower low. Then what do we see? We see a higher high in this market. This higher high is breaking market structure on the lower time frame. We then see a pullback in price like so. And then we look to buy this area right here. And then we look for a continuation to the upside. And, you know, in terms of an invalidation, when would we be wrong within the market? Well, we would be wrong if price then continued coming down and then broke lower and broke this low right here. Because just in terms of raw market structure, this is then a bearish bias, okay? Because we're now making lower lows and lower highs if price did continue lower like so. So if that did happen, then I would want to be cut out of the trade, and then I would want to, that is why I'd want my invalidation to be right there. And then in terms of targets, very, very simple, guys. You want to be targeting external range liquidity, which may be like the Asian session low. So for example, right here, this is going to be external liquidity, which could be the Asian low, it could be the London low, or even just like a 1 to 2 risk to reward. You want to be exiting out of your position, taking most of your profits, and then moving on to the next trade. It's okay leaving runners to run, absolutely fine, but you want to be securing a lot of your profits. And then for a buy position, let's say this is the Asian high right here, external range liquidity, taking most of your profits off. This might be like a 1 to 5, 1 to 4. Absolutely fine. But make sure you're banking profits. If you're taking a funding challenge, you're banking them and then moving on to the next trade. So this is the step number 3, the institutional invalidation in targets. Now let's look at the live trade case study so we can piece this all together. Let me walk you through this case study step by step. What you can see here is this is on gold on the 15-minute time frame. Our directional institutional bias is looking for longs on this market. So we are only looking for longs, guys. We don't want to go counter trend. We always want to stick with trading the trend. We understand that there's liquidity resting below the London session low. So we can go ahead and mark that on like so. We understand that there's liquidity below there. And what we want to see is price come down, manipulate and induce traders into this market, thinking that this is a breakout, when in reality, this is just grabbing orders for institutions to move the price in the intended direction. So what this will do right here, okay, this right here will induce traders thinking that we're breaking out, okay? They're getting short in the market. Remember, the institutional sell orders need to be matched up with the institutional buy orders. So once that takes place, our entry is going to be somewhere within here, and then we're going to capitalize on this move right here, which is the distribution phase in the market. So simply what you're going to see is accumulation. Then what you're going to see is manipulation. Then what you will see is distribution. So that's the 3 areas in cycles in price. And then we can look to target external range liquidity at the London session high. So let's see if price acts accordingly. So we're looking for a run of that liquidity. And now once you see the run of liquidity, it's important to drop down to the lower time frame because we want to see a shift in market structure. So just in terms of market structure here, this is on the 1 minute time frame. What do we see? We see a lower low, followed by a lower high, followed by a lower low, followed by a lower high. So right now there's bearish market structure within the market. So we need to see more price development. Then we get another lower low, breaking structure like so. So this is a valid lower high right here. So we're looking for a break of this lower high. And then this will be the market literally showing us their hand that, the market is turning bullish. And now that is lining up with our higher time frame institutional buyers. So let's see if we can break above like so. The price actually then continues lower, which is fine. We can just keep trailing with the market. You then can see we get this strong flush to the downside here. This is strong manipulation. This is our most recent lower high here. So we're looking for a break of that. You can see that's exactly what we get right here on the 1 minute time frame. And now we're active and our order goes into the market. So you can see you've got this order block right here on the 1 minute time frame. So this is where you're going to be entering within the market. We're triggered right there. And then we're looking to target either a 1 to 2, or you've got London liquidity, which is quite a distance away. And you've also got a significant high right here. So, whether you take the trade on this breakout here, also fine, or whether you want to be more conservative and wait for a pullback, that is also absolutely fine. And it's really up to yourself. So you're triggered in the trade right here. This is during the New York kill zone. And you can see this trade absolutely smashes take profit right here. And this was taken with all members within the exclusive Discord, within the exclusive community. So this is an absolute textbook example. Let's just pop over back to the 15-minute time frame to see if we got any further continuation. And you can see ultimately the external range liquidity at the London high was taken there for a 1 to 4.5 risk to reward. So this right here is your final take profit, and this is where you're going to be taking all of your profit off of the market. So this is a great buy example, broken down step by step, a trade that was taken with all of the members within the exclusive Discord, and I hope that you have enjoyed this in-depth case study. Join the free Discord for my free trading course and in-depth analysis. The link is in the description down below. However, if you're looking for mentorship with myself, an official FTMO funded trader who has helped hundreds of people just like you achieve their trading dream with 24/7 support and step-by-step guidance for the simplest way to become a funded profitable trader, then get direct access to my website. The link is also in the description down below. I personally look forward to seeing you on the inside.